Hi, I'm Tom Bradley. Welcome to this Steadyhand video. Today we're going to talk about the Steadyhand Equity Fund and specifically the manager of the fund. Today I've got Gord O'Reilly from CGOV Asset Management here, and we're going to talk about his firm and his approach to investing. Gord, welcome.
Thanks, Tom.
Well, Gord, as a founder of the firm, you're in a great position to give us some background, the history, how you approach things. Can you tell us a little bit about CGOV?
Well, we started CGOV in 1995 with 4 partners, and at that time we had 0 assets under management, and today we've grown to about $2 billion on investing for families, foundations, and endowments. And we've always kept the same philosophy over the last almost 20 years, and it's been a pretty fun place to work.
Now, Gord, you have a unique investment philosophy. It's served your clients well over, if I do the math, about 18 years. Can you walk us through how you approach investing and specifically what you look for when you're buying a company?
Okay, well, when we're looking at any business, we're looking for 3 key things. We want a business run by great people. That means they allocate capital well, they don't pay themselves excessively. And then on a business front, we look for great businesses. Typically a CGOV business has been around for over 100 years. CN Rail's been around for 100 years. Novozyme's been around for over 100 years. And then when we look at the third thing we look at is a great valuation. There's too many businesses out there that are recognized as great businesses, but if the valuation is not in CGOV's liking, we won't buy. We're very patient. The key thing on Bay Street and Wall Street these days is a lack of patience. And for us to do well and our clients to do well, if you wait for the right opportunities and be patient, our clients are usually rewarded.
Now, Gord, one of the things about your approach is that it's unconstrained. You're not beholden to the index or to what clients are thinking. You certainly don't lock yourself into a certain size or company or geography. Take us through that and how it impacts the portfolio.
Well, CGOV is a little bit different than a lot of investment firms in that we come in every day thinking, how are we going to get our clients a 10% plus rate of return? We're not concerned necessarily about beating the index, because if we get 10% rate of return, we think we'll beat any index over time. So that sort of mindset allows us to look at different things and look at the risk rewards of the stocks we're owning. And if we can buy something that's discounted valuation in the emerging markets, we'll do that. If it's, we can buy something closer to home that's giving us a fantastic risk reward, we'll look there. But it's more about that absolute return mindset than any benchmark hugging that we tend to do.
Now, one of your disciplines that we really like is the fact that you limit yourself to 25 stocks. And so it's always been one that's I've been curious about. How did you get to 25? What's the background on that?
That started from the outset of the firm, and we just always wanted to have that competition for capital. If something is going to go into the portfolio, something has to come out, and that creates a huge discipline because, if I want to put in some, new IPO that's just come out, a lot of the other investment managers on our team will say, Gord, it's pretty hard to take out Novartis or Rogers or one of those other great companies that we've owned in the past to put in Moose Pasture Mines or some technology stock. So it's a great discipline. The other thing it does is, by virtue of the math, you're about 4% in each name, and by that math, you're almost overweight every name in the index, which so we want to create a very high concentrated focused portfolio. And the TSE is also Toronto Stock Exchange, is also a very undiversified index, and we want to make sure that we're invested in the right sectors as opposed to just putting a paper stock just because it's in the index.
Gord, you classify your investments as either core or opportunistic. What do you mean by that?
Well, for us, a core stock is something that can grow its intrinsic value basically throughout any economic scenario. Think of a Starbucks. The whole camera crew here is drinking a Starbucks right now, and we could, they're probably going to do that in good times or bad times. They may go for a grande rather than a venti, but they're probably still going to go to Starbucks. So Starbucks is going to grow its earnings profile. The opportunistic companies are more cyclical companies. Think of a Magna, an auto parts company, or a materials company, where you're hoping for a revaluation of the multiple in order to get your price appreciation. And for those types of companies, we want to have at least 50% upside and only 20% downside to our best and worst case scenarios before we'll do an opportunistic company.
Now, just finishing up, Gord, you know, one of the things we're very vocal about is client-manager alignment. How does that play out at CGOV?
In terms of client alignment, I don't think you'll find much more than at CGOV. All my personal net worth is invested in our funds, and with my ownership of the CGOV partnership, I'm very much aligned with our clients.
So you're up to your eyeballs.
Very much so.
Well, Gord, clearly you're well aligned with your clients. Thanks for coming today. There's some great information for our clients to hear about the fund. Now, get back to work.
Thanks, Tom.